Welcome to my channel and this week review of stock markets and stocks in my portfolio. TSX finished flat on the week, but continues to show some strength on the chart, staying above 20-day SMA. However, next week is the end of the month, when usually big investors do portfolio rebalancing and profit-taking, leading to short-term dips in the stock market. So we may see all markets finishing red next week, unless the Fed will pour some gasoline in the form of earlier than expected rate cuts. As I expected, gold saw a price correction last week, after briefly hitting all-time high. In the absence of news about rate cuts, I think this correction will continue to at least 60 SMA, and potentially even lower. So I am not adding to my gold stocks at this time. On the other hand, oil chart looks weaker now, falling below 120 SMA. So I think chances for a correction in oil prices are slightly higher now, which may lead to a decline in my oil companies too. However, unlike gold stocks, oil companies usually pay good dividend. So I am keeping my positions in oil companies intact, as I don't expect big correction in oil prices nor in oil companies. Since I am expecting price correction in all markets over the summer, I am taking some profits from the stocks that were moving up, and keeping it in cash right now. The two companies with good gains that I wanted to mention in this review are Bombardier and Celestica. I added Bombardier to my portfolio at the end of last year, when the chart started to look bullish. I always wanted to have the only Canadian aircraft manufacturer in my portfolio. But the company was having difficulties over the last few years redefining itself, and its valuations looked sketchy. But I think the company eventually found its niche in the market, which started to reflect in its growing revenue and earnings. I swing traded half of my position a couple of times this year, as the price was climbing, and last week couldn't resist taking a more profit when the price hit $90. Now I own 50% of my regular position and will be waiting for a pullback to at least to 20 SMA before reloading on this stock. The risk of an imminent pullback is also supported by the 5-year chart. It shows that the stock price currently reached the top of the third wave, and is in the oversold territory. It will be interesting to see if stock market algorithms will try to bring the price down, simply by following this technical pattern. Can the price break through the top of this channel and run away above $100 before starting to pull back? I think it is also possible. Company valuations at the current price still looks very attractive. Market cap is only slightly above annual revenue of $7.8 billion. And the PE is still relatively low. If some analysts will come with target price upgrade next week, we can see the breakthrough in the price pattern. But I am still happy holding my gains, and waiting until the dust settles with 50% of my position. Another stock in my portfolio that saw some mind-blowing gains over the last 12 months is Celestica. This stock was my cash cow this year. Similar to Bombardier, I was able to swing trade it several times, and now holding 50% of my position. Celestica is a technology company and is considered somehow related to AI revolution. So the share price is driven by AI hype, and it is not clear when it is going to stop. The chart is starting to show strong resemblance with the pattern during dot-com bubble. So it wouldn't surprise me if the price jumps over $100 pretty soon. But let's not forget how each bubble usually ends. Unlike some other AI stocks, which valuations are getting considerably bloated, Celestica market cap at the current price still looks quite reasonable. I don't think it is overvalued and still like having this company in my portfolio. Hope there is still a chance for another pullback over the summer, so that I could increase my position at a lower price. And in some other markets, which I don't invest in, it is worth mentioning that Bitcoin was able to break through both 20 and 60 SMA, and the chart looks quite bullish now. By the way, this is why I like the 120 SMA. It is often more accurate than 100 SMA, showing very precise touchpoints during price reversal. That's all for this week review. Please subscribe if you find it interesting.